I've discovered that a lot of people trade candle range theory in a wrong way. So let's discuss how to use this thing effectively on your chart. You understand? As a trader, if you're using a concept, it is advisable of you to understand the concept and how it works effectively so that you can use it on your chart in a good way. You don't just do it randomly, you do it in a logical way. So what is candle range theory? The candle range theory is essentially telling you that every candle on the chart is a range. So what does that mean? For a 1 hour candle is a range, you understand? There's something that happened between that tiny interval. So there's a range, you understand? Whatever happened within that range, you can use it to judge your bias. So like now, this example on the chart, you can see this example, right? You can see, typically, let me even explain the analogy of the candle range theory, a typical analogy of the candle range theory, right? So first, let me grab my eraser and take this thing off. So first, you will see that this is the candle range high, right? Candle range high, you understand? Candle range high, you understand? Why this one is the candle range low. So this is the candle range low, you understand? This is the high and this is the low of this candle. So what this thing is telling you essentially is that this candle, whatever happened within this range from this place to this place is what you are going to use to judge your direction in the market. So we believe that if the second candle close within this range, like this candle, if it close within this range, that means the next candle will continue going down bullish, and that's exactly what happened here. So that is the typical model of the candle range theory. You understand? So, but then before the market push to the downside from the normal trading side, from the normal trading perspective or the smart money concept, we all know that when the liquidity happens, the market tends to move towards the opposite direction, and that is exactly what is happening on the candle range theory. The candle range theory essentially includes the liquidity strip as well. You will discover that the second candle always take out the liquidity. You understand? It will always take out the liquidity, right? So it will take out the liquidity. This is the candle range high, right? This is the candle range high, and this is the candle range low. So this is the low, and this is the high. But then the second candle tends to take out the liquidity of this previous candle, the liquidity of this candle that built up. The second candle will take it out. You understand? So that is essentially what makes up a good candle range. You understand? So, but then some of you will be like, okay, this is a candle range. No, this particular one here, you can't take it as your CRT because this is the reason. Let me show you. It closed with the body above the candlestick. Instead of closing with the wick so that it will take out the liquidity, it closed with the body. So what happens? Okay, if it closes with the body, this is what is going to happen. The market tends, the chance that the market will continue to the upside is very high. You understand? The chance that the market will continue to the upside, printing another bullish candle is very high. So that is why you don't want to trade a candle range theory that has the second candle closing above the the previous candle's high, which is the first candle. You don't want to trade it like that. You have to be logical. First, these three things must be met. Number one, the candlestick, the liquidity must close within this range, right? These two things, this thing must be met. Number one, the candlestick, the second candlestick must close within the range. Then it must take out a liquidity of the previous one. Then you are expected to see the third candle start printing a little bit below the second candle, right? You understand? A little bit below the second candle, not above, not printing. If the third candle continue printing to the upside, that means the chance of coming down will not be available anytime soon. So you want to keep this into consideration. Make sure that the second candle always close within the range of the first candle so that you will be on the winning side. Okay, let me go to my chart and show you a typical example, right? Let me go to my chart and show you a typical example. Let's go to maybe Euro USD. Euro USD, right? Let's go to Euro USD. This is Euro USD. I want to go to the daily time frame. Let's go to daily time frame. You see this thing. Okay, look at a nice example here. This is a nice example. Why is it a nice example? The first candle's range, the second candle closed within the first candle range, right? You understand? You understand? Although the liquidity was not taken out properly, but then you must not see the ID model, like the ID model or the paper or the textbook model. You have to use your logic and your other conferences to trade this thing. But then we know that one of the criteria is met, which is the second candle closing within the range. You understand? So once the candle close within the range, what are we seeing today? We're seeing that this today candle continue going down, right? That is it. That is how to. I can show go on and on and show you a typical example. Okay, let me show you a nice example that will represent the this thing that will represent the ID CRT. Okay, let's see another example. This is the candle range high, right? And this is the candle range, candle range low. You see, you see. Now we have this candle, the second candle taking out the liquidity that built up on the second candle. So let me zoom it so that I can see it effectively. You see, we have the liquidity taken out. So this is it. This is the liquidity of the previous candle and the price took it out. The price took it out, right? So the price took the liquidity of the previous candle, you understand? So that is how to trade the market. And what happened? After the second candle take out the liquidity, the next candle continue printing to the downside. So that is how to trade this thing, guys. You don't want to be doing it randomly. You have to be doing it logical. And again, if you want to join my community, it is totally free. Just come and join us every day. I send signal apps. Some week we do 300 pips, 200 pips, depending on how the market volatility is. So if you want to join us and rub mind together with us, it is totally free. Kindly join us and enjoy. Thank you. Peace out for now.